Welcome to the Bitcoin Macro War Room, where we jack into the market mainframe and derug the narrative. Plug into the pipes, M2, DXY, inflation, momentum, fresh prints, CPI, ISM, payrolls, rates, truth by facts, not vibes. Tweets and news rundown, meme to policy, curated, timestamped, tradable.
Welcome, you've got mail.
Copium not included. Roll the tape, let's invest like it's 1999, but with better charts.
Whew, that intro gets me so hype. I'm excited for this one. It's another Friday, so you know what that means. Another Bitcoin Macro War Room. We're going to take a look at the charts. We're going to see what data released this week and what it means. We're also going to take a look at my system, which has a bunch of institutional paid research that I use to signal if we're risk on and we should be invested, or if we're risk off and should be holding cash or whatever else. So at the end, stick around because we got some interesting tweets and some news to take a look at. But without any more fluff, let's kick it off. So we're going to start off with the chart. And again, the first thing that kind of jumped out at me right away is from last week, we had this breakout of global liquidity, and now we've come back down quite a bit. So it wouldn't be surprising to me if we kind of retest this zone that we broke out of. We're also nearing the end of the month. There's about a little under a week and a half left in September. Bitcoin performance has been pretty incredible so far for September, which is seasonally a oddity, right? Usually Bitcoin doesn't do well in September, but we still have a week and a half left. So I would keep your pants on. Don't get too bullish just yet, and let this month kind of play out. So the other thing to note here was the macro regime tracker here on the bottom has dipped again and is testing this bottom red trend line. So we're kind of in no man's land again, but we'll take a look at the system in a little bit because everything long term is still looking good. So I did want to point out one extra thing. We usually just take a look at this chart, but something that I brought up, I think a couple of weeks ago, which is Bitcoin's correlation with the Nasdaq has been super tight. As you can see from this chart, this starts all the way back in November of 2024. And we have been correlated with the Nasdaq almost tick for tick, besides sort of this one area here. And maybe you could say this one really small area here. Outside of that, this has been following tech stocks really closely. So something I'm keeping an eye on, and I think that's interesting to watch. If the Nasdaq does begin to sort of roll over, there's definitely potentially more downside for Bitcoin. So keep this in mind. But let's jump into the data, because obviously this week was a big week. We had the FOMC, right? So Mr. Powell did give us a 25 bips cut, which was to be expected. Saw a bunch of nonsense on my timeline that they're going to cut 50, or they're not going to cut, or they're going to raise rates. All of that is nonsense. If you're not watching the Fedwatch CME tool, you're just dreaming. These are the odds for a reason. So regardless, we'll get into some of the stuff around the rate cut and kind of what that means, but we'll take a look at the rest of the data first here. So the Empire State Manufacturing Index, again, this had a huge miss. This is a snapshot of manufacturing conditions in the New York area. So obviously a negative print here is a contraction. This is a fast and sort of noisy read on goods, demand, pricing, and employment in that area. So I wouldn't put too much stock in it, but a negative print is not good potentially for PMIs. On the flip side, down here, we had the Philly Fed Manufacturing Index, same thing, but for the Philadelphia area. And this beat massively, 23.2. So kind of a weird dichotomy there in the manufacturing index releases. And we can sort of continue here. Core retail sales did beat. So this just measures consumer spending, excluding autos. So not including cars. This is your kind of cleanest demand momentum signal. It drives GDP nowcast. So this beat, and so did retail sales, right? Which is total consumer spending, including autos and gas. This is the biggest chunk of the economy, so it does steer growth and sort of inflation expectations. So growth is still good given these two prints. Again, you can see without the COVID sort of area charts how this kind of looks. And yeah, it's stable, but nothing really too crazy to take away there. unemployment claims came in lower. So this is, again, weekly new filings for jobless benefits. This is a sort of labor market stress gauge, and this came in under. So this lessens the urge for the Fed to continue the cuts. But I think now that they've started, they've opened the spigot, so to speak, they're going to continue to cut. I don't see a world where we don't continue to cut. And we're going to take a look at the Fedwatch. But before we do that, for next week, there's a lot of data. We have manufacturing and services, PMI services being the largest one. The forecasts are actually down. So it's going to be interesting to see what these numbers come out with. You also have the final GDP quarter over quarter. And I like core durable goods and durable good orders month over month. So we'll take a look and see what that is next week. But we'll wait and do things one release at a time. So let's take a look at the Fedwatch. Move my camera here really quick so you can see the numbers. But basically for October 29th, it's a shoo-in that they're going to do another cut, another 25 basis point cut. There's an 8% chance that they don't cut, but I don't think that's going to be a real possibility. And then you have an 82% chance in December of a third cut. So again, you could take a look at the probabilities here, and they have clearly moved over. What's interesting to me is that in 2027, there are odds now coming out that they start raising rates again. I'm assuming this is probably because of sort of the inflation trajectory, but that's a long time away. So we'll take it month by month, week by week. And that's pretty much it for the rate cut stuff. We can take a look at my system, which is what you might actually only be here for. And newsflash, nothing has changed from last week. Again, this is a very slow moving system. The whole point of this thing is to capture the entire cycle move of Bitcoin, which could take 3, 4, 5 years even. So the fact that things are moving week to week is generally the case. But the most important thing to note here is that my 3 institutional investment research services that I pay for are all still very bullish, right? This has not changed. It has not changed since I started this show. And these are the most important indicators. They are weighted the heaviest. Obviously, I can't share what exactly is in them because they're paid services, but this is basically a total score. Are they bullish or are they bearish or are they in between? They're all still very bullish. Everything else here from last week has stayed the same. And we can take a look at sort of some of the actual on-chain data and charts. Again, we used to go through CryptoQuant, but I've done this myself. I've released my own website. You can check this out in your own time, but MVRV Z-score, again, this has not turned bullish yet. These, this purple line has not crossed the 365 DMA yet. So this is technically still bearish. If we really want to zoom in here, you can kind of see where it is. So we still have some time to go for this. For the DXY trend filter, which is just, again, dollar drops, risk assets generally go up. And this is still bullish. So nothing really has changed here as well. STH, so short-term holders realized price, again, still bullish. You can see back in the end of August, beginning of September, we bounced right off the short-term holders cost basis line. So again, this is still printing bullish, and that's good to see. And that's pretty much it for the on-chain data. I didn't really have anything else to share of interest besides the Bitcoin heat macro phase here by Axel Adler. So this has kind of sort of bounced a little bit, but it's still in the down zone, right? So we could potentially see still some lower prices here with a week and a half left in September. But again, take this all with a grain of salt. In terms of the long term, I'm still very bullish. Again, my least favorite chart here, the IFP, is still bearish. So that makes sense. Short-term holder and long-term holder, nothing really has changed here. So not much to call out. And again, retail demand is basically nowhere. There is no retail demand currently. OTC balances are still low. And the smart DCA filter has signaled off currently given the price action this last week. So we can move into some of the tweets and the news. And what I did want to start off with is England and China. So Bank of England slows pace of QT. And that's really the most important thing you need to take away of this. The Bank of England kept their rates unchanged on Thursday and said it was slowing the pace of its quantitative tightening program and skewing sales away from long-dated gilts to minimize the impact on the bond markets there. So them ending or slowing QT is good. Again, I don't put too much stock into the Bank of England, but Eurozone does play an important part in liquidity. China, though, plays an even bigger role. And China decided to leave their policy rate unchanged even after the Fed reduction. So they're in no rush to ease monetary settings, but they have been flooding the market with liquidity in terms of the China M2 chart. So take this for what you will. The People's Bank of China injected 487 billion yuan, which is equal to around 60 billion worth of 7-day reverse repos through open market operations on Thursday. They held their rates, and their RRP is basically serving as their main policy rate at this point. So nothing too surprising there. I did want to call out this chart, which I think is important for every sort of macro investor to be watching, which is the high yield index option adjusted spread. This thing is super low, which is very good. That's very bullish. And the important kind of takeaway here is that when this starts rising, when the spread starts increasing, that is when you want to be cautious, right? That is definitely when you want to be cautious. So that's a risk on signal. And another interesting chart that I was looking at earlier as well is junk bonds. So the high yield bond junk ETF has basically broken out of over a year of sort of capitulation and bottoming. And that is also bullish for risk assets and especially for Bitcoin as well. This kind of confirms the equity bull market in the S&P and the Nasdaq. So again, Bitcoin has been highly correlated to the Nasdaq. So it's important to honestly watch US stocks, right? This is a tight correlation currently. So take that for what you will. And we can move into some of the tweets for this week. So I've been seeing a lot of this on my feed, and not only Metaplanet, but MSTR and a lot of the treasury companies have been sort of suffering in terms of price momentum and MNAV. For example, here, Metaplanet in a 73% drawdown, struggling to buy Bitcoin, and MNAV collapsing towards 1. Charles here says all treasury company MNAVs trend towards 1 over time. I don't know how much stock I put into that last sentence specifically, but when Bitcoin is chopping or not trending up, it's, the premium that you get from these treasury companies or the MNAV is going to bleed. That just makes sense. So, something to watch. I never really understood why you would want to hold a treasury company as opposed to just going and buying spot Bitcoin and self-custodying it in your own cold storage wallet, whether that's a Ledger or a Trezor or whatever your wallet of choice is. Why not just hold spot? Unless you can't for some reason, you're in some kind of jurisdiction where you're banned from buying Bitcoin and your only exposure is through these treasury companies, then okay, fine. But I don't think there's any other reason to hold these treasury companies unless you had to, basically. So whatever, that's just my take on it. Timothy Peterson here. One of the factors contributing to Bitcoin September crashes is high valuation, and that condition is not currently present this year. You can see that through the Metcalf value. So these red dots are the last 4 Septembers and sort of Bitcoin's value on a log scale. And that's why a lot of the performance has been sort of negative in September. We're nowhere near that currently. So that's why it's been a sort of switch this month where September has been oddly bullish. Andre Dragish here with total AUM in US ETFs, 10 trillion. Total US spot Bitcoin ETF AUM, $154 billion. So an implied allocation of 1.4%. And that just means we're still early in terms of institutional adoption. And I definitely agree with this take. The actual size of the ETF holdings and the amount of money behind them, compare that to things like the FX market or the stock market or even gold, and it's still a kind of drop in the bucket. So last one here from Daniel Baten. Vietnam Central Bank just initiated closure, of 86 million bank accounts starting September 1st. All the accounts closed lack the user biometric information, which gives the central bank next-gen financial surveillance ability. The official reasons are to prevent fraud. This is exactly why Bitcoin exists, and one of the reasons it was created, for sovereignty of the individual, for freedom to hold your own capital that is not decaying or being printed to infinity. This is the exact reason. So Vietnam basically wants your biometric information, whether that's a scan of your iris or your fingerprint or your blood, whatever it is. But they're closing accounts if you're not giving it to them. Bitcoin is the way out to this. So shout out to all my Vietnamese brothers. Get yourself some Bitcoin and, do what you got to do. But absolutely crazy. It's a dystopian future out there with AI and all these things happening. So that's pretty much it for the tweets. And honestly, that's it for this week. Let's see how September plays out. Again, if you made it this far with me, thank you so much for sticking it out with me and watching. If you did enjoy the video, you know what to do. I'm not even going to ask you for it. If there's something you want me to look at that I don't normally look at week over week in these videos, drop me a comment and I will definitely take a look. And as always, have a great weekend. I will see you next time.